Hi everybody and welcome to the weekly Forex Outlook with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday the 2nd of June 2013. Well, where is the year going? It's flown by already. And just as we start, kind of go towards the end of the second quarter, the market really is making a little bit of a turn, or at least contemplating rather than trending at the moment. And there's been a few changes to the usual trends that we've seen. We've seen the dollar really struggle and come off quite sharply last week. Likewise, stocks haven't been able to do too well. And on top of that, we've seen Treasury yields in the US rise. Now, it's not just US stock markets that have come under pressure. It's also been the Nikkei in Japan. That is off. That has not been able to manage gains at 14,000, and it's just fallen. As you can see in this chart, we've got the Nikkei and dollar yen. Dollar yen has been one of the most traded currencies this year so far. But as you can see, it moves very closely with the Nikkei. So at times in the last couple of weeks, we've had big declines in the Nikkei, and that's been followed by big declines in dollar yen. Now, right now, dollar yen, it just looks like we're in a pullback. It doesn't necessarily suggest that we're going to be changing trend anytime soon. But the pullback, if it continues, and people may start to think that this could be the end of the dollar rally, the end of the stock market rally. So we are watching that very closely. The key driver of this cross this week, though, is going to be US payrolls on Friday. That is going to be absolutely critical. Not only do we have a lot of May data coming out the first week of June, including PMIs and everything else, but it's really going to be that payrolls data. If that payrolls number is strong right now, the market expects 165,000 jobs to be created. So nothing too fantastic. If we do get a stronger than expected number, that could really fuel fears that QE is going to come to an end and that the Fed could taper QE purchases. How would that impact dollar yen? Well, it's interesting. It could go one way or the other. Would the stronger economic data be enough to sustain stock market gains? Could that push the dollar higher? Or will people start to think that a stronger number is actually going to cause QE3, which could cause stock markets to sell off, and thus push dollar yen lower? So we're really going to be watching that closely. A break below 110 on the downside, a very bearish development for dollar yen. But likewise, if we break above 103, 104 really, which is the top end of the channel that we're trading in at the moment, that really opens the way to 105, even potentially towards 107. Now, what else are we looking at this week? The ECB meeting. Now, the chart that you can see in front of you is the euro. And as you can see, we're very much trading in a range. Now, it has benefited from that dollar weakness, but it's all going to be focused on the ECB on Thursday. Will the ECB hold off? Will they sound a bit more hawkish, a bit more cautious than they did last month when they cut interest rates? We shall have to wait and see. If they did do a surprise cut, we think that would weigh very heavily on the euro, and we could break below 128.80, which is the base of that range, maybe back towards those lows from March when we got below kind of 127.50. However, if they don't do anything, then the upside, it could potentially be tested. Now 130.80, 131.25, and then 132. They are huge resistance levels, but in the very near term, 130. 30 to 40, huge level of resistance. That has thwarted the euro bulls so far today during that dollar sell-off. And could potentially prove to be a bit of a stumbling block. We may need to wait for the ECB to see if we can convincingly break above there to get towards that 131 level. But overall, good luck trading this week, and please do join us next week for more. Thank you.